Yeah, so this is going to be part 2 of the beginner guide to the Strat. We had part 1 hosted by AdexTrades yesterday. Appreciate him for hosting that class. For those of you that weren't able to attend, we do have part 1 recorded in the lessons tab, and this will be part 2. We've done a part 2 already, but I know we've had a lot of new members join, so we want to make sure that you guys are learning the Strat and you guys are able to trade with us when it comes to trading every day. We usually use we have a language when it comes to trading. We usually like to trade using like the Strat language. So we want you guys to understand what what we're talking about. And so ultimately you can understand and you can view the market the same way. So welcome everybody. You already know I go by Adex, and this will be part 2 of the beginner guide to the Strat. Thank you for being here. All right, so this is first and foremost, I am not a financial advisor. My content is for educational and entertainment purposes only and should not be taken as investment advice. AdexTrades is not a registered investment, legal, or tax advisor or a broker-dealer. Nothing in the server constitutes professional investment or financial advice. Here's the rest of the disclaimer, now so let's get on to the Strat. So here are the topics that we're going to be going over, this is the topics that we're going to be going over. I have a review over part 1, then trading the Strat combos. I'm going to be talking about the pivot machine gun, the TTO, trigger machine gun, and going over magnitude. And also, please, as I'm going over these PowerPoints and as I'm going over these slides, please write notes down. Please jot questions down, and please ask questions. Like, you can bombard me with questions. I will answer them as we go. Feel free to ask it in trading chat. If you're just a regular member, feel free to ask in off-topic chat. If there's a message that's been just chilling there for a minute, please interrupt me and say, hey, someone has a message, you haven't gone to it, and I will go to it, okay? I don't want to miss your questions. Really don't want to miss your questions, okay? So we have trading the Strat combos, pivot machine gun, TTO, trigger machine gun, and the magnitude. Okay, so what is a Strat? So the Strat is a price action trading strategy that was developed by Rob Smith, Rob in the Black, the founder-in-chief, the commander-in-chief. After 20 plus years of looking at charts, Rob noticed that there was specificities when it comes to the way that price moves. He noticed that price moves in 3 ways, and the way that price moves, we call to these universal truths. It applies across all asset types, meaning that you can use this with stocks, crypto, forex, and any tradable vehicle. It eliminates market noise and focuses on what we can only see, which is price action. Right? So when we talk about why is it that we love the Strat, is because it really just focuses on price action. Price action is the end all be all. No, I don't want to say end all be all, but price action should be the number one indicator, especially when it comes to learning, so you can understand how the market moves and things like that. So when we say that the Strat eliminates market noise and only focuses on price action, this excludes all subjectivity. So, and I want you guys to remember that, and if you need to write that down, the fact that it excludes all subjectivity, because all it is based on what we know to be true. All right. So we don't guess, even though you're going to hear me talk about anticipate. That's something that we could talk about with later. But when it comes to ultimately what is a Strat, it is just based off the objectivity of price action, what we know to be true, and meaning what we see, what's right in front of us. Literally, what is right in front of you, that is what the Strat is based off of. Okay, so Rob says what we see is what we know. So what we see at that current moment is exactly what we know. We don't guess, we act. Another thing that I want to talk about is price aggregation, and it's a big differentiation, is that price doesn't move, price aggregates. And when we say that when there's a movement in price, we're just telling you that there's one side is more aggressive than the other. But that's a topic that I'll be going over later. All right. So review scenario 1, the Strat scenarios. You have scenario 1, which is the inside bar. You have scenario 2, which is the continuation directional bar, and then you have scenario 3, which is the outside bar. With the three key elements when it comes to the Strat, we have time frame continuity, broadening formations, and we also have inside bars as a third key element when it comes to the Strat. Remember, this was a review that Alex went over yesterday, so I hope you guys were there for that. And if you weren't, make sure you look in our lessons tab to be able to go over those. When we talk about time frame continuity, time frame continuity refers to achieving the highest probability of trades when one side is particularly present during that trade at that moment. Our goal as straters or as traders is to identify who is actively in control in the given market, whether that be buyers or sellers. And this occurs when all time frames are pointing in the same direction, and it shows if the different participation groups are agreeing with each other or not. So when you see this, actually, let me bring my pointer out. You have the laser pointer right here, right? So this is referring to as full time frame continuity. Why? Is because you have the daily green, you have the week green, you have the month green, you have the quarter green, and you have the year green. So what this tells you is that buyers are present on every single time frame. How do you visualize that? Simply, if you go on the 1 day chart, you're going to see that the candle that you're currently on the daily is going to be green. If you go on the 1 week chart, the current candle that you're on is going to be green. If you go to the month chart, the current candle that you're on is going to be month, so forth and so forth. That's what we mean by time frame continuity. If you go through the different time frames, it will be a green candle, and you know that full time frame to the upside, buyers are there on all time frames. Okay, and that's the same thing with the downside. If you see all red, then that's referring to time frame continuity to the downside. This is an example of full time frame continuity to the upside. MU, you got a green day, you got a green month, green day, green week, green month, and green quarter. Buyers are here on all time frames. Okay. This is an example of full time frame continuity to the downside. You have a you have a red day, you have a red week, you have a red month, and you have a red quarter. So sellers are here on all time frames. The reason why we like this, or the reason why we trade this to the downside, is because we know that institutions are selling this stock, and they're simply selling it at the bid. Right? And so because of that, we know we are more comfortable going short, because we know that the general move, not only in the bigger move on the macro time frames, but we know that institutions are selling this on all time frames as well. Would you like to go long on this stock? You shouldn't. And the reason why is because you have a higher probability of being profitable by taking the short side, because you know that institutions are on the same side as you as well. All right. The next thing we have is our broadening formations. So broadening formations is how price is discovered. We know that price moves in terms of aggregation, and it moves in a series of higher highs and lower lows. If you look at this example right here, this is an outside bar. So this is a scenario 3, right? And a scenario 3 is a broadening formation on a lower time frame. I want to show you this real quick. Let me go to the pen. So you see this 3 right here. If you were to mark that, and then if you go on a lower time frame, let's say this was like the daily chart, and then you go to the 5-minute chart. This is that same 3 right here, right? And this is what we talk about, how it creates a broadening formation. You can connect this high to this high, which is the 3, and you can connect this low to this low, and this is that 3. So you just connect these two, and you connect these two. That's your broadening formation. All right. Let me just erase these. Erase all that. And remember, if you guys have any questions, feel free to interrupt me. So on this chart, we're looking at the month. Oh yeah. So let me see. Because of your so you see how with this let me go my laser pointer. You see how with this charting software that line is really not connected to the top of this broadening or connected to the top of this high. That's just simply because of the charting software. Okay, so I want you to understand that you can connect these lines to point by point, but just understand that this is a broadening formation, and price is going to move within this range. Okay, and that's just simply how price moves. Let me go to the next slide. All right, so inside bars. We know that they represent areas of consolidation. The reason why we like inside bars is because inside bars are actionable signals, okay? Once we see an inside bar, we know what to do. We wait for the close of that inside bar, and then we take the next candle, and then we take whether or not it breaks the high or it breaks the low. If it breaks the high, then we go long. If it breaks low, then we go short, all right? And it's just simple as that. Like in terms of just the general concept about the inside bar breakout, it breaks the upside of the inside bar, you go long. If it breaks the short side of the inside bar, you go short. Simple as that. All right. One second. Boom. All right. 1 second. Next one. All right. Okay, let's go to the next slide. All right. So that was the review. Remember, if you have any questions, feel free to ask. And if you want to get a more in-depth analysis, please check out the lessons tab. So now, what is the strat in part 3, trading the strat? Let me go to the next. So the Strat combos, all right. So this is what the Strat combos. This is the Strat combo cheat sheet. You got to have this engraved in your mind, and you will, because once you start to see price, then you're just going to see these combos just playing out on a daily basis. All right, so you got your 2-1-2 bullish continuation, you got your PMGs, you got your 3-1-2 downs, 2 down 2 up reversals, and things like that. Once you get more comfortable with the Strat, you're going to understand, and this is what I like, my theory about the Strat. This is what I come up with, that each actionable signal has its own magnitude of itself, right? I think that, like, when you see a 3-1, you know that 3-1s have more magnitude, potential to give you a more magnitude of a type of a play in contrast to a 2-1 type of breakout or a 2-1-2 type of breakout. You see a PMG, you know that a PMG has more magnitude than just a regular 2-1-2 on the daily, right? Because a PMG can take out consecutive candles, right? It's not just taking out that first target, it's taking out, literally, it could take 5, 6, 7 targets. So once you get comfortable with the Strat combos, you will figure out, and this is what I tell people in my one-on-ones and things like that. They say, like, oh, which one is the best one? Which one is the best one? That's ultimately up for you to figure out. It's the one that you are most comfortable with. I always bring the example of AdexTrades, who's the king of the 3-1s, because that's his favorite setup. He loves those 3-1 setups. My favorite type of setups is hammer outside bars, because I'm looking for that hammer outside bar with that 2 continuation. I love 3-2 continuations, and I love 3-1-2s, and I love 3-2-2s, and I love reversals, right? Especially off of BF. But you're going to figure out which one you like. Maybe you just like playing the regular 2-1-2. Maybe you like playing the 2-1-2 rev, right? It's up to you. But you're going to have these Strat combos engraved in your mind. Trust me, you will. Next slide. And remember, please, any questions, feel free to ask. So this is just what our continuations are. I apologize for the image quality, but you have your 2-1-2 bearish continuation. And remember, you guys, so you see this inside bar, and I say, like, oh, once you see an inside bar, you salivate over that. Like, and what I mean by that is that once you see the inside bar, you're like, ooh, there it is. There's your actionable signal, and you wait for the close, and you take the entry off the next candle. People get, especially new people to the Strat, they say, oh, I saw the inside bar and I got in. No, you don't get in on the inside bar. You wait for the next candle, and that's depending on whatever time frame you're looking at. If you're on the daily chart and you see an inside bar on the daily chart, then you wait for the next day. If you're on the monthly chart and you see an inside bar on the monthly, you're waiting for the next month. If you're on the 4-hour chart and you see an inside bar on the 4-hour, you're waiting for the next 4-hour candle to open, and you're taking it if it triggers whatever side, right? So it's always the following candle after the inside bar. You see the inside bar and you're like, bet, wait for the next candle, play it. All right. So your entry, when you want a 2-1-2 bearish continuation, you go inside bar. Your entry is the break of the inside bar, and then you go down, right? And whatever that target was, you will have like a candle right here. You take it to the target. Same thing for the bullish continuation. You have your inside bar. You wait for the next candle bar. Once the price breaks above, you take the entry, and then you go up. Okay. Let me see. And let me just go. If there's any questions so far right now, let me check. All right, we good? Nobody got no questions? All right, perfect. Oh, let me go to the next slide. All right, so reversals, okay? So a reversal can only occur in 3... Wait, is that... Let me get back to that. All right, whatever. So a reversal, you have your 2 down, 2 up reversal. Which is this example right here. You have a 2 down candle followed by a 2 up candle. And then you have your 2 up, 2 down reversal. You got a 2 up candle followed by a 2 down reversal. And where is your entry, right? When you go, it's your entry for the 2 down trigger is when it triggers the low of that 2 up candle, and you're taking it to the bottom of the range when you look back to the left. All right, so whatever that candle is to the left of that 2 up candle, whatever the middle candle is, that's your target. All right, we're always looking back. Remember, the Strat works in I forgot how they say it, but it's a 3 combo. It's a 3 pattern combo. Right, so you're looking at 3 candles. You're looking at the one on the left, the one on the middle, and the one on the right. The one on the right is where you enter, but you're looking at the one on the middle to give you your entry, and you're looking at the one on the left to give you your exit. Okay, Hopefully that makes sense. If it doesn't, please ask. Now let's look for a couple of reversals. I showed this reversal right here. This is one of my favorite reversals, the 322 Rev reversal, especially on the month. Currently, if you guys want to see what a 322 Rev reversal is, just look at any energy ticker, any XLE, Exxon, Chevron, SLB. They all did trigger the 322 Rev on the month. So those are my favorite, not my favorite, but those are one of my favorites. 322 Rev on the month, that's a reversal. The reason why it's a reversal is because initially you were going down, and then you reverse to go back up, okay? Initially, you're going down, and you reverse to go back up, okay? Hopefully that makes sense. 2 reversals to the downside is simply just a 2-up candle followed by a 2-down candle. Your reason to enter was as soon as you break that low of the 2, all right? Hopefully that makes sense. Pivot machine gun. So a pivot machine gun is when price goes back through a previous range and stops get taken out at the same time. A series of higher lows get taken out in a rapid succession in a couple of candles, usually 1 or 2. And traders who place their stop at these levels get taken out. I'm really glad that we're having this class right now because the simple machine gun that I could show you, give me 1 second. Where's it at? 1 second. Let me. Okay, give me 1 second. Where's it at? I'm gonna show you real quick. There it is. All right. So let me show you this. Boom. This is a pivot machine gun. SPY. What SPY did on Friday is considered a pivot machine gun. Why? Because you took out all these candles right here, and this is what I'm going to do. Array. So, if you mark array on all these candles, boom, 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 boom. SPY. So all these blue lines right here, these are all the pivots, right? These are all the pivots from SPY going up, right? And you can see that in one day, SPY took out all these pivots. So when you hear in the news, and that's why I love it, like when the news says like, oh my God, we took out 4 weeks of gains out in 1 week. Like what they really talking about, like we PMG to the downside. That's what we did. That's really what a PMG is. And you're going to see this occur a lot of times. I can just show you SPY is an indices. Let me see. McDonald's. Oh, CAT. I think CAT was one. Yep, CAT was. This is another one. PMG to the downside, right? So this is a beautiful example where you go 4 days up, right? Or 3 days up. You have your 2-up day right here. Another 2-up day right here. Another 2-up day right here. And then all of a sudden you PMG to the downside. You mark your wicks, right? And the reason why this phenomenon is special, the reason why this phenomenon is special, or the reasoning behind this phenomenon, is that you have buyers, right? So if you're initially a buyer, and let me just remove these drawings right here. So let's say you were a buyer at this level at 191, right? And then the next day price goes 2 up. As stratters, or as if you are moving your stops up, you now move your stop up from 191 and you're now moving it up to the bottom of this candle right here. Okay, so you move it to the bottom of this candle, it's at 192.48, and then all of a sudden CAT goes, the next day CAT goes up again. Oh shit, CAT goes up again, I'm about to move my stop up again. Boom, you move your stop up at 193.45 and you're like, all right, I'm still gonna be in the play because we're still good, I'm moving my stop up. Next day CAT goes crazy and wants to go up again. Oh shit, let me move my stop up again. 194.57, right? So imagine that all these different participants, they have their stops at this level. You have this guy Mark, has this he has his level at 190, his stop at 194.57. You have the friend Jerome, he has his stop at 193.45. Then you have Cindy, she got her stop at 192.48. Then all of a sudden, the next day you see this bearish engulfing day, right? And you see what happens, that it takes out all these stops right here, and it does it in 1 day. So you went 4 days up. So imagine you went 4 days up just to get taken out in 1 day. That is what the pivot machine gun is, and that is why it's so special. So whenever you see things on an uptrend, so and what I love about it is like when we saw Apple do this, wants to go on the weekly, right? Apple wants to go 8 weeks up. Oh, bet, go 8 weeks up, because we know that this has a potential to PMG down. So whenever you guys, and remember, it's on any time frame. So you can see it on the 1 minute, the 2 minute, the 3 second, like it doesn't matter. The 3 month, if you see consecutive candles going up, it is a PMG opportunity, and we can PMG back to the downside. All right. So hopefully you guys understand what the PMG is. All right. Now this is just a couple examples of the PMG. This is an upside example where you had candles going to the downside. So people who are going short, they placed their stops at the top of this candle. They're like, oh, we're going short. And then the next day it went down. They're like, bet, we're going to put our stops here. Went down again, bet, we're going to put our stops here. Then all of a sudden, the PMG right back to the upside. Okay, this is an example of a PMG back to the downside. This is another example. Oh, this is when MOPMG back down in 1 week. So this is crazy. This is why I'm like, this is just what happens with price. Look at this. Imagine if you're an MO and you're a buyer. You got in at this level right here, and MO went up. All right, bet. Keep going up. MO went up too. Oh shit, you going up again. Inside bar, you're still in, and then all of a sudden it goes 2 up. That is 1, 2, 3, 4, 5, 6, 7 weeks that it just goes up in price, just to get taken down in one candle, in 1 week. So that's just what the PMG is. Hopefully that makes sense. TTO. Okay, let's go to the TTO. All right, so a triangle day out. So a triangle day out is another Robism. It's another word for a pullback or corrective activity. Before I continue, I want everyone to, like, for those of you that don't know what a TTO is, I know we get a lot of questions. Make sure you write this section down, because this is my favorite section to go over. Hold on. This is my favorite section. This is probably my favorite thing about the strat. And it's not anything special. It's just simply corrective activity. But the reason why I love the TTO and with the strat is because we anticipate TTOs, right? Whereas, and this is no disrespect to any other trading strategy or things like that, but I remember as a beginner trader, I would be taking profits as soon as it like went up, and I'm like, oh, 20%, 30%, oh, let me take my profits. But with the advantage of knowing what a TTO is, you can actually see like, hey, price is there, or not price, but my target is there, but I know in order for it to get all the way up there, we have to correct, right? We have to have some form of corrective activity. You can anticipate that form of corrective activity. You can add into that position. You can buy more contracts, right? Or you can just simply get in once you figure out the TTO is there, and then you can watch price go up. I love the TTO because whereas where you think that price is done and this is where you can take profits, you can essentially milk that play and make more profits, understanding ultimately where is your price target. All right, so it looks like a triangle on a chart. It's possible areas to add, and I like to say, this is just me, I like to say that I assume a TTO until proven otherwise. And the reason why I have that saying is because I'm confident, and I want you guys to be confident in the plays that you take. Because you're all doing your homework. I want y'all to be doing your homework. So when you're doing your homework and you're like, oh yeah, this play look good, I got my targets to the upside, I got my entry, yeah, we good, we chilling, right? And then I want you to assume a TTO until proven otherwise, because I want you to be able to milk as much of that play as possible until it actually reverses on you, if that makes sense. Okay, this is just an example of a TTO. Spy on the 15-minute chart. You have consecutive candles down, and now with the advantage, and I drew these charts before Zeus's trend line demonstration and his strategy with the trend line. So now with the whole trend line thing, oh my god, we can go crazy with the TTOs. But anyway, so when I say we anticipate a TTO, you see these consecutive down candles, and you know that SPY is ultimately going up, because like you said, like, oh, this is my daily call trigger, SPY is going to be going to 404. Let's say you say that SPY is going to be going to 404. So in order for it to get a 404, you know you need some corrective activity. It can't just go straight to 404 unless, like, you know, we have volume or there was like a, you know, a special day, event day, but it can't just go straight to 404. You need it to come down a little bit before going back up. So you are anticipating, where can we bounce before going back up? And for me, right, I say like this is where my analysis of different indicators come in. I'm a stratter, so ultimately when I'm looking at my plays, I don't need indicators, but I'm using indicators to see where I can TTO off of, right? I like the addition of pivot points, and I like the addition of VWAP9 and the EMAs. The reason why is because oftentimes, and if you don't believe me, ask OG, because OG now uses it and he loves it. Oftentimes you will see TTOs occurring off of these levels, whether it's VWAP, the EMAs, or the pivot points. In SPY, this example right here, the TTO occurs off the R1 pivot. So I'm literally asking myself, when SPY is at this level right here, let's say SPY is this inside bar. I'm like, all right, we got here, we're reaching exhaustion, we just hit a high. Where are we going to TTO from? I wonder if we're going to TTO off of R2. Let's see if we can TTO over there. Boom, we break through R2. Oh shit, we didn't TTO for R2. All right, we have this blue weekly pivot right here. I wonder if we're going to TTO off of here. We hammered. Oh shit, y'all, we might TTO. Remember, it's anticipatory. You don't it's not like assume that it's going to happen. You just anticipate it, right? And so you see this hammer and you're like, oh shit, this could be the one, y'all. 122 rev off the hammer, then boom, it doesn't trigger a 2 up. So you know, oh shit, we didn't TTO off of there. You continue to go down in price. Now I'm asking myself, all right, are we going to TTO off of VWAP? I feel comfortable if we want to TTO off of VWAP. Boom, it does not TTO off of VWAP and it continues going down. You are continuing to ask yourself, I wonder if this play is done, or is this a bad play, or are we going to TTO? Remember, you're confident in your initial direction. You should be confident in your initial direction. Price is still above my daily call trigger, right? So at this point, I still have no reason to exit. You see that price gets to this R1 pivot. Now you have your inside bar. And what's interesting about this inside bar, and I'm going to talk about it in more advanced, I don't like to say advanced strategy because it's just price. It ain't no advanced strategy. But like once you see this yellow inside bar off of after consecutive down red candles, think of this white as this red. But after you see this green bar after consecutive red candles, to me, I'm like, bet you can start reversing right here. And not only that, you have an actionable signal as well. So when we talk about we take plays with high probability, this is what we're talking about. I'm literally saying to myself, all right, y'all, I think SPY is going to TTO off of here. Why? Because we have our inside bar on the 15-minute candle. We're bouncing off of this R1 pivot. We have this green inside bar after we have 8 consecutive green red candles to the downside. If we break 2 up, this is going to be our first 2 up candle after through 8 consecutive down candles. We can TTO, y'all. Let's see it. Let's wait. All right, SPY breaking above. Let's get in. Boom. And then you just wait to see if it actually plays out. And that's just what the TTO is. So it's anticipating, right? If you have questions about that, let me know. Remember, it's just a triangle. So hopefully this example makes sense. It's just a triangle. In order for price to continue going up, you need to come down a little bit, but where are you going to come down to? Anticipate it, then boom, go back up. We had a beautiful example with AMD today where we caught the TTO as well because AMD had a 3 candle on the 15, but I'll go over that example in a little bit. TTO versus reversal. So for me, this is my definitions. This is my definition of it. TTO is a pullback when in full time frame continuity, right? You should assume a TTO until proven otherwise when in full time frame continuity. So energy right now, everybody says, oh, energy gap down today. I don't care. Give me a red day. I don't care. You still weekly on the green. Or well, I mean, the week just started, so it's probably a red week. But at least as of last week, like you would have been green on the week, still green on the month, and green on the quarter, right? Right now, I'm just assuming a pullback. I'm not going to get all freaked out on energy until it goes 50% of the previous month or like later, right? Or 2 rev on the week. Then I'm going to start getting sus about my energy plays. Why? Because bulls are there and buyers are there on full time on all the macro time frames. And this is why I ultimately say I don't want you guys to get like freaked out on your swings and stuff when you're in full time frame continuity, because it's like, oh, you just a 2 down day? Well, we needed that because you went 2 days up in a row. Did we not forget we went up on Friday 2 for energy and we went up on Monday? Give us a red day. We need it. But continue going up. But I'm not going to get freaked out until you rev on the week, right? So assume a TTO until proven otherwise. A reversal actually signifies a trend reversal. And that's usually when you'll see like exhaustion rich. So like you'll reach the top of a broadening formation. And I'm like, oh, okay, we can reverse here because we reached the top of the broadening formation. Like, why are you going TTO? If you're at all-time highs, might as well reverse, you know what I'm saying? So, and then I'm looking for 50% rule on the previous bar. The 50% rule, whether it's a Fibonacci, actually it has to be a Fibonacci, I don't know what else you're using, but like the 50% rule is very, very important. It's very, very, very important, right? Because it literally, to me, this is my definition of it. The 50% rule, it signifies a place of equilibrium between buyers and sellers. As soon as you break 50% to the downside, who's in charge? Sellers, because they win, right? If you think of it as like you have like a tank and you have two different watercolors and it's literally like 50%. You have 50% blue water and 50% red water. As soon as one side wins, you have more than one side, and that's why the 50% is so important, because as soon as sellers break below 50%, sellers win, and that now has more pressure, selling pressure, and that can lead to increased selling pressure and can lead to increased move to the downside. All right. Hopefully that makes sense. If it doesn't, I will definitely go over that. Triangle they out. So back to that SPY example that I showed. This is just a little drawing of it where I say like, hey, as soon as you see that color change, right? Especially after consecutive candles of a one color, and it's an inside bar, all right, they're consolidating. If they go two up, this could be a possible trend change. It could be a possible trend reversal change, and this could be the TTO back to the upside. Initially, you went up, and so now we expect to continue going up. If that makes sense. Like that, okay? That's the TTO, okay? Hopefully, slide. Let me go next one. These are just another examples of a TTO. Walmart, we went long, then all of a sudden it came down. Oh, this is an example of a TTO where I use in conjunction with like my indicators, right? So with Walmart on this example, Walmart comes down to VWAP and to the 9 EMA, and that's where TTO's off of. So that's why, so you'll literally hear me like when Walmart's at this level, I'll say like, all right, y'all, we got it looks like we're consolidating right now. It seems like we could start retracing. Let's see if Walmart wants to bounce and TTO off of the week, off of VWAP. Let's see if Walmart wants to TTO off of the 9 EMA. You anticipate it, right? And if it breaks below, then you're like, bet it didn't go that. Let's see if it wants to TTO off the 9 EMA. And if it does that and you get your first 2 rev candle, then that could be your possible TTO to the upside, all right? Anticipatory. Then it actually plays out, boom, off the 9 EMA, goes up. And then there you go, it goes up. So these are two examples of another TTO. We have Netflix on the 5 minute, where you have this hammer on the 5 off of the 9 EMA, and then we TTO off of the 9 EMA, and then we go back up. We have another example of Apple on the 15 minute where it TTOs off of the 9 EMA and then it goes back up. I know strategists say like they don't like indicators, but I promise y'all, like, it's a game changer when you literally can see where we're going to TTO off of. Like, you can see, you're like, oh, there's VWAP right there. Like, all right, I'm gonna wait till it goes right there. Like, you just wait till it goes there and then see if it TTOs. So it's a beautiful thing, especially when you catch it. What's that? Oh yeah, great question. Which one? So I think this example was Ripster's cloud. So I used to use Ripster's clouds. Then I just had like the EMA clouds indicator. Now I'm using the Strat V2. So I'm using the Strat V2 and I just simply check the I check the box that says the 9 and 21 EMA with the cloud with VWAP, and yeah. And then I also add the 5 EMA as well. So to summarize, I use the Strat V2 and I check the 9 and 21 EMA indicator on, and then I also use the 5 EMA and I'm using pivot points. Hopefully that helps. Yes, sir. Okay. This is just a TTO on a daily chart. Here's an example of you taking the trigger where price goes against you initially, but because price went 2 up at TTO, just to go back to the top of the range, we don't have to look at that. So this is an example where I got TTO'd out, I think. Yeah. So price trigger. Oh, this is why. The reason why I showed this example is because this is based on my swings, right? I like to say that when we take swings, right? Not oftentimes, but sometimes you'll see price trigger your weekly call entry or your monthly call entry. But then it will come back down below that weekly or monthly call entry. And you're asking yourself, what the fuck? Is it a fail 2 up? And but I like to say, hey, if it's full-time freight continuity to the upside besides the day or that week already, it's probably just a TTO. It triggered it, but it's going to come right back up to actually do the play. If you guys remember Microsoft 3 weeks ago where we got Microsoft and I was like, we're going to get it. And then Microsoft, it actually went up the next week, right? That's what I like to... Oftentimes, I've noticed when I journal my trades that, hey, price will trigger the first week, but it won't give you the move the first week, but it'll give you the move the second week. But as long as you're still in the play, you can still eat off of it. You're just anticipating whether it's going to TTO. So, what example is it? Yeah, I'll figure out the example. If you have any questions, please feel free to ask. This is an example of a daily TTO. All right, so trigger machine gun, also known as the domino effect. Shout out FICO Jordan. This is using multi-time frame analysis and actionable signals to gauge magnitude of a play. Trooper, shout out Trooper. He said, think of it as different time frames serving as a market participants of their own. As one reaches their price target, they hand the baton to the next market participant with a bit of acceleration. If triggers are so close, it could potentially get through with magnitude once it triggers in force. When he said that in chat, I was like, this boy is Shakespeare. I was like, literally, I just got to remember that because that was like a perfect explanation. If you guys don't understand, I'll show you in a chart example for those of you that are new to this chart and you're like, wait, what? I have no idea what you're talking about. But this is what we mean, all right? So this example of Snap. So this Snap example, this was I think it was on a Friday 0 DTE, and we played it. It was it had TMG potential, and it was one of those things. I like to try out theories if this happens, then this is what happens. But anyway, so Snap was the first one where I was like, yo, if this happens, and this TMG shit is something special. Where so we had the same trigger for the daily put entry, the same trigger for the 2-day chart, and then we had we had the same trigger for the weekly chart, and we had the same trigger for the monthly chart as well, right? And what was special about not only the fact that they had the same triggers is that these triggers were close to each other, right? You had them being 50 cents away. So you had the daily put trigger to go 322 down on the day was below 26.94, and to go 22 down on the day was below 26.94. To go 22 down on the week, that was going to below 26.44, and that was the same trigger to go 22 down on the month, which was at 26.44. So if they're 50 cents away from each other, if one triggers, just think of it you're only 50 cents away from each other. You have the potential to trigger that trigger as well, and you will see it be a big move or a magnitude type of move. That is an example. Boom. Right? It literally it just triggered all of it, and then boom, right back to the downside. And it's a beautiful, when you see it happen, it's beautiful. I know some traders took Starbucks a couple, I think it was last week, and it had a TMG play to the upside, and that shit went crazy. But TMGs are very, if you see them and how you can identify them, you have to look at different time frames. You have to look at the 4-hour. You have to look at the daily. You have to look at the 2-day. You have to look at the 3-day. You have to look at the 4-day. Because if you can see actionable signals on all time frames, or in majority of the time frames, you have a potential to TMG to the downside. Okay. So in terms of this Snap play, what it was a 2-1-2 down on the 1-hour. It was a 2-1-2 down on the 2-hour. 2-2 down on the 4-hour. 3-2-2 down on the day. 1-3-2 down on the 2-day. 2-2 down on the 4-day. 2-1-2 down on the week. 2-2 down on the month, and 2-2 down on the quarter. Right? All within 50 cents of each other. So because of that, all those triggers are within each other, and if they trigger one of them, it could trigger multiple, and then it could just lead to a domino effect. Okay, hopefully that makes sense. If you guys have any questions on that, please feel free to ask. All right, so now magnitude. All right, so this is a big. A lot of people ask, like, what is magnitude, and I think a lot of people have different definitions when it comes to magnitude. People like to say magnitude are determined by outside bars. That's true. Once you see an outside bar, that's your range, and that's like that is your range of a series of higher high and a higher low. A higher high connected to a higher high with a lower low connected to a lower low, and then that is your price range. You can say that this is the magnitude of the range. However, I like to say that magnitude depends on multiple factors. Magnitude pretty much. So remember, my definition of magnitude is how far a price can move. And when you see a chart, you'll be able to determine magnitude when you see different factors. You can see sector strength. It depends on fundamental catalysts, your place within the broadening formation, trigger machine gun, ATR, and many more things. All right. So, and I'm going to be going over magnitude, and I'm going to be showing you guys in different charts what magnitude is. All right. Now, how we trade the strat. Okay. So how we trade the strat by using the strat plus multi-time frame analysis. I'm sorry for separating those two. People are probably going to say, no, they're within each other. But I just want to really harp on multi-time frame analysis because I want to, the advantages of looking at those different time frames, and also the advantages of looking at the macro time frames to get a bigger picture of what is going on. We trade the strat by determining magnitude. We want to see how far a play can move, and once we determine how far a play can move, that gives us our risk to reward when it comes to calculating the play and whether we want to take that play or not. We trade in the direction of full time frame continuity, right? Or no. I'm not going to say that because you got Abisai over here who never be liking to trade full time frame continuity because he be wanting to take SPY calls on the reversal, but he smacks them. So what I like to say when it comes to trading in full time frame continuity, trading in the direction of full time frame continuity, you have your best probability analysis when it comes to trading in the direction of full time frame continuity because institutions are there as well. When you see that buyers, or when you see that the candle is green on the day, the candle is green on the week, the candle is green on the month, the candle is green on the quarter, and the candle is green on the year, you know that buyers are there on all time frames, and therefore you have more conviction to take calls because of the fact that this could just be simply going up, and if it does have a 2 down day, they could just reverse it back to the upside. All right, we prefer to see all the relevant levels directly on the chart so we can concentrate on just triggering the time frame. And when I refer to this is like I simply mean like your homework. All right, simply your homework, actually drawing out your levels, seeing where your entry is and seeing where your exit is. But I've heard and I've seen a lot of traders where they don't even know where they say they don't know where price is going. We want to teach you like, hey, you have to have an exit strategy. You have to have a price target. When you take that play, you need to know your exit before you take the play. When we all got in AMD puts this morning, where was our exit? Gap fill. We said it before we got it. We're like, AMD is going to the gap. That's it. We don't care where else. Yes, you could take profits along the way, but we had a exit strategy before we took AMD. As soon as you heard AMD, you said we want to take it to the gap. All right. So ultimately knowing where your target is before getting into any play. All right. With that being said, that is actually the end of the part 2 of the strat. But now I'm going to be going over examples so you can actually see, via trading view, what we're actually talking about. And this will be the great time for you to actually ask these questions so you could see the chart and see what we're actually talking about through the chart. All right, so the first example I'm going to go over, I'm going to be talking over the TTO play that we took today for NVIDIA. Give me 1 second. Try to go that out. Okay, now let me do this. Perfect. All right. Let me see. Any questions so far? No questions. Really? No questions? We good? Okay, I feel like we good. All right. All right, so NVIDIA. 15. And then for those of you, oh, sorry, not NVIDIA, AMD. I took the AMD. I'm tripping. Oh, did I delete my? Hold on. Y'all gonna be. I gotta go back all the way back because I'm not. Yeah, I'm not taking that. Yep. I'm not. Yes, sir. Okay. Mm-hmm. Great question. Example today, XLE. I didn't play any puts on oil. And the reason why is because of the fact that, let's go ZOM, on the day, ZOM is red on the day, red on the week, but green on the month, green on the quarter, and green on the year, right? So because of the fact that it's green on the macro time frames, I'm reluctant to take the put play because of the fact that I know we could just TTO and come right back up. They can clap the downside play and they can just TTO right back up. The only reason, or not the only, but the way I would take the opposite side for a play that's in full time frame continuity to that opposite side is if I have a target to that opposite side. So for example, if I had like oil, y'all know oil gaps up and gaps down a lot. So with oil, the reason, like, because right now you have ZOM. This is beautiful. So ZOM right now on the daily chart, right? And let me actually do this trade recap blink. ZOM. Okay, so ZOM right here, I will take the put side trigger if I have a reason to take it, and the only reason I need to take it is if you give me a target. ZOM has a target with the gap fill. So I mark the gap fill right here. Mark that gap. Boom. So that's my target for ZOM. So the only way I'll take ZOM puts is if ZOM triggers 2 down on the day tomorrow. And now I'm like, we're 45 cents away from triggering the gap. Might as well. You trigger 2 down on the day. What do we say as Stratters? Hey, if it triggers your entry, you get in, right? Stratters say if it triggers, you get in, no matter what. That's what, because remember, it's objective. You don't think. The objective nature of the strat is if it triggers, you get in. However, we play options, so it ain't that easy. We can't just be getting in every single time. And it also depends on the time frame and what kind of move you want, right? So with ZOM, I will be looking at XLE as well. So I literally have XLE at the same time, and I would literally go XLE on the day. Does XLE have a gap? Oh, baby, there you go. So I literally just look at XLE. There's your gap, and this is why I love playing sectors, because the sector gonna tell you where you're gonna go, right? So you have the GPT, gap price target, boom, boom, boom. So literally, I'm not playing ZOM puts until XLE breaks 2 down on the day. And you see how this is beautiful? Look what XLE's entry on the day is. If XLE goes 2 down on the day, where are we? We're in the gap. We're literally in the gap. If it decides to go 2 down the day, we're in the gap. Your target, boom, 79.31. So that's why I would play puts on XLE. Oh yeah, let's play energy puts. And it's fine because we have a target to the downside. And then once we complete that gap fill, what did Apple do today once it completed its gap fill? Bye-bye, see you later to the upside, reversal? Like, that's what it did. Once it hit its gap, it was like, all right, we finna reverse. So remember, we anticipate. So I'm like, all right, so energy, what you gonna do? You got month, you got green on the month, green on the quarter, green on the year. Yeah, I know we're bearish right now. And yeah, I know ultimately, if we're really in a bear market, energy will fall with the rest of the market. But right now, I got buyers on the macro time frames. Until you flip that month red, I'm still buying. And so I'm going to anticipate you want to just fill this gap and then possibly bounce back up. But if you could fill this gap and then go down, oh, remember, we still in puts. So if you still want to play us on the puts, that's fine. If that makes sense. Hopefully that helps. Of course. Back to the AMD example. Oh. On the 15. Hold on. Okay, so let me show y'all. So this is an example of a TTO and how you can like literally like catch it like right when it's forming. Okay, so this was, so I want you to see, because I don't know what happened to that line, but so this was when, if you guys can see the chart, this was when, like, in real time, right? AMD created a 3 on the 15. And shout out to Zeus, because he's powerful when it comes to these trend line breaks. He talks about how when you create a 3 off, and it's a trend line break off of a trend line. So let me just mark the trend line right here. You see that this right here is a trend line. Oh, 1 second. Oh, no, we're good. All right. So you see that this right here is a trend line, right? And you see, all right, so AMD, you're going up, you're going up, you're going up. Then all of a sudden you have that 3 that comes out of nowhere. Remember, I talk about a couple of things. I say you have consecutive green candles, and now you have your first red candle after having consecutive green candles. Not only do you have your first red candle, it is a bearish engulfing 3, right? Not only is it a bearish engulfing 3, but it's also a bearish engulfing 3 on a trend line break, right? And so that's 3 confluences already. Oh, not only that. Oh, hold up. Let me show y'all real quick, baby. Add VWAP on here, so real quick. Come on. Let me just VWAP this thing real quick. Stop playing. There you go. Where you at? Stop it. Come on, man. Just the upper band. Just the VWAP, bro. Just the VWAP. That's all we care about. Okay. All right. So VWAP is this white line. Remember, volume weighted average price is very important. I know a lot of people, some people do not like to use indicators, but I'm telling you, institutions, I just care what institutions want to do. If institutions are playing pivot points or using pivot points, then we using pivot points. If institutions are using VWAP, then we using VWAP. Why? Because they're the one who's pressing, that are buying the buy orders for millions and billions of dollars, right? They really moving the price. So if they're going to buy when it hits VWAP, we going to do the same thing. Ain't no reason why we shouldn't. You know what I'm saying? So that's why I say it's really important, because these trend lines, not these trend lines, but these reversals don't just happen out of nowhere. They always happen, like there's a reason why they always happen. I keep trying to say, like, if you see a reversal and you didn't know why it reversed, it's because you missed something. Whether there was a EMA there, whether it was a VWAP there, or whether there was a pivot point there was something there that you just missed. Because market just don't rotate out of nowhere. It does not. We're algorithms. They work on algorithms, bro. Like, it just doesn't work that way. So anyway, so with this trend line break, you have your first 3 candle off of VWAP rejection. Remember, the trend was down originally. I like to say I got an AMD puts, and I said AMD is going to get into the gap fill, and we ain't going to do anything less but that. So I want you to get to the gap fill, right? So if you're already going with the conviction that AMD is going to get to your gap because you have that target and you have full time frame continuity, I am anticipating my TTO. I'm anticipating a TTO, right? If it reverses and it goes 50% of the first leg, then I'm going to be like, oh, maybe we're reversing here. But until then, you still below my daily put trigger? I'm not getting out. Ain't no reason to. So you see this trend line break, and then you have this 3 down candle. This is the start of the potential TTO back to the downside. And what gives you that confluence to actually take that play is what's the actionable signal that comes after a 3 candle that you can take that's actionable? 3 twos. So you get that 3-2, and boom, there is your TTO back to the downside. And if I draw the paths for real quick, just so you guys can visualize it, blah, blah, blah. Down, you have to retrace up a little bit to keep going down, and that's your TTO. So hopefully that makes sense. So that's an example of a TTO on AMD that we took today. Any question? Any other question? Let me see. Trading chat. Okay, so no questions in trading chat. So I think we all doing good. Okay, I think we're all doing good. Nobody got any questions? Good. Y'all just want me to be teaching? I think that's what it is. All right, I'll keep going for sure. All right, so TTO, that's an example. Let me show you a example of the reason why these triggers. Let me go with an example of this one. Keep going. Give me a second. Okay, I'm gonna show you guys a reversal off a higher time frame. Off of a higher time frame. And this will, I know Sal wants to, Sal had a question about how we take reversals or how we, or our methodologies behind swing plays. So when it comes to my swing plays, I'm looking at the macro time frames, and I want to first foremost, I want to say shout out to the pack, because the pack definitely, they changed my mindset when it comes to swinging, and I give a big shout out to them because now I just love swinging the shit out of this market. I don't give a damn what type of market we're in. I'm swinging the whole entire time. Get paid, because the market tells you you can swing in any type of market condition. And the reason why people say like no, you can't swing, because they can't see it. But our job is to teach you and to show you how you're going to be able to see it. All right, so DE, let me go to DE. That's crazy. DE went all the way 31% before the drop. That's crazy. Okay, all right, so micro time frames. If I'm using full time frame analysis, multi time frame analysis, I got DE. Boom, boom, boom. So DE on the weekly. Where's DE on the week? So broadening formations. The reason why broadening formations are powerful. Where is it? All right. So broadening formation for DE on the weekly. It was drawn from this point. Wait, hold on. What was it? Yeah, this point. Yeah, it was drawn from this point to this point right here. Okay. So I drew DE for a broadening formation right here. Let me change the color. Month. And remember, we extend our broadening formations. You extend your broadening formations because you want to see possible areas in the future where price will bounce. Okay, so I extend this broadening formation. And then if I simply just do this real quick, boom. Okay, right. So this is your broadening formation. So you see. And this is why, the BF is powerful. I don't care what anybody says. You see that you put your points at right here. Look where price bounced. Boom. Hello. Right at the BF. Did not care. Right there. Bounce. On some magical shit. Like, it's just what it is. It's just what it is. Right? It's crazy. So you see that bounce and you're like, huh, okay. So if you're bouncing off a broadening formation right here, this is why I'm telling you, like, we like taking things off of BF to BF. Like, we like sway, I say swing that thing. If you see it on the bottom of the BF, swing that thing to the top. Because why? Look at your risk to reward to the upside, right? Compared to the downside. BF to BF. Price goes from range. If price likes to trade in a range, right? So if I draw a path right here, 1 second, price can potentially do this. Just go here, bounce 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 here. Okay. Now, if price breaks below this broadening formation, then simply you go into the next broadening formation right here. Boom. Let me just connect that. Now you can go to this broadening formation and price can go. If it breaks down, price can go here. Boom, boom, boom. Right? All right, so you guys are getting it. Price trades in a range. You draw your broadening formation, then you know, okay, price can range in this range, right? That's what the BF is. Now, when you see that price bounced off the bottom of a broadening formation, you are simply saying, what is the probability or what is the chance that you can go to the top of the broadening formation, right? You know that price ranges and goes from bottom to top, and so you know that the broadening formation phenomenon in terms of price ranging, you have a high probability that they can go up. What you're doing as a trader is you're simply taking a probability analysis, right? You are saying that what is a probability that price can go to the top of the BF or not? If it doesn't, and if it breaks below the BF, where's your stop loss? Below the broadening formation. Where is your risk? Look at your risk to reward when it comes to DE or XLI for that matter. This was your risk to reward for DE. And this is why I say, like, yo, when it comes to swinging, like, y'all can eat. But, like, the DE was at, what was it? It went to 400 or something, and we were on the 320s and the 340s, right? Right here. The reason why is because we took it right when it was here, and we just said, all right, just buy 2 months out. The risk to reward from here at this level is high. If DE goes below 290, then we'll get out. But if DE starts going up from this level, hello, you got the chance to go to 462. That's all I needed to know. And that's why, hey, I don't, if Sal is here, I actually took a picture, bro. I want to show you. Give me 1 second, dude. And I was like, dude, I could. My boy, I'm about to show you something, dude. 1 second. Dude, where is it at? And remember, please ask questions. Please, this is a perfect opportunity to ask questions. Where's admin? Notes. Examples. Oh, here we go. Oh, yeah, here we go. Cause Sal, you was with me. You was with me when we was talking about it. So, right at this BF. This is just, like, the only reason why I'm bringing this example is just to show you guys in real time how we anticipate these plays. So back on 7-4, right? We said, what's your opinion on DE? The reason why, look at it in real time. DE was right here on the month, right? When I talk about, look at the potential risk to reward when you're at the bottom of the broadening formation. And then Detective Strat said, like, you know, he's bullish. And then even Sal, you even said a month-long sweep for call, bro. If you actually got in, bro, you would have ate. Like, because you caught it. Like, you literally were like, oh, yeah, this is good. And so if we hold this broadening formation, then most definitely yes. And that's proceeded to happen, right? This is what we talk about when we come together as a team to, like, formulate and come up with these ideas, is because we're taking these high probability analysis and we're looking at these charts and say, hey, you could potentially bounce off this level. And if you bounce off this level, then we can eat, right? You had your inside bar. And I got in early. Remember, Stratters, we get in early. Look at how it respects this BF. You get a little bit below, but ultimately you still close above that broadening formation, right? Let's see how it goes. Now there's a reversal. Oh, and look how significant. Look at this as well. You have, shout out Zeus. I'm always going to bring those trend lines. Now you have your trend line break for DE. This is what actually caught his mind too. He was like, oh, you got a trend line break for DE. Oh, we going up. Look at this. And when we talk about, when they say like, oh, trading is gambling, I have to tell people like, bro, shut up. Like, shut up. The reason why is because we are taking things, we are using yeah, hello? Yeah. It was good. Mm-hmm. Yes, and I'm going to talk about that. I'm going to talk about that, like the ugly side to which I think it's okay because I'm like, bro, I get to just relax. Like my plays are cooking and stuff. But I will talk about the ugly side when it comes to swinging, and this is just what the reality of swinging. And I will talk about that where you have to see that you down 30%. You have to see that you down 40%. See that you're down 50%, possibly even down to 80%. Right? It's like shout out to C's. He started to notice like he used to say that like he used to get out, but now he's starting to notice. Oh, sometimes you gonna see down 60%. But if you still got the direction right, you can eat off that play. So DE, what's actually funny about DE is that I got in early on the 320s and I didn't alert it because I was like, bro, this shit is way too expensive. And it went down on me after the week that I got in. So I was down like 40% on the play, but I was like, bro, we still holding this BF, so we're going to go up, right? And then you go from being down 40%, but you have 2 months out on your contract, and then look what happens. Hello. And you're in it the whole entire time. From BF to BF, potentially, right? I mean, the move is still going, well, market going down now. But look at this. This is 1, 2, 3, 4, 5, 6 weeks. 6 weeks, 6 green weeks, right? And so this is just the advantage of like, hey, taking things to BF. Look at Cat, for example. Cat likes to go from BF to BF2. Goes top, you hit it, go down, right? Goes top, you hit it, go down. He goes top, you hit it, go down, right? Costco, taking things from BF to BF. Look at it. He goes to top, hit it, go down. Hit that BF, go top, hit it, go down. Like, it just, and this is why we got in Costco, the 2-week chart, because you had a double inside 2-week off the broadening formation. And this is why I say, like, yo, if you get an actionable signal off the bottom or the top of a beat, look at it. Look how beautiful it is. Costco 2-week chart on the upside, too. It told you to get in. We just hit that BF. You had your inside consolidation where something's about to happen, whether we want to continue going up or continue going short. And if you trigger that 2 down, take it short. Take it short. BF to BF. Right? Then you have your double inside week off the bottom of the BF. All right, where's your risk to reward when it comes to this play? You got in here, right? This is your potential. Remember, magnitude. When Costco was about to break out of that double inside week, I said, oh, the magnitude is up to 650. I'm not saying Costco can go to 650, but if the chart is telling me you have the possibility to go to 650, remember, I always say probability analysis. All I give a damn about is do you have the potential? Oh, you got the potential to go there? All right, that's all I need to know. I don't know whether or not it's going to go there, but what is the probability that it can go there, right? That's when you say, what is the sector doing? What's XLP? Is XLP green on the week? Is it green on the month? All right, what is the sympathy doing? What's Walmart doing? Is Walmart green? What's Target doing? You know Target affects that as well. Oh, where are we in terms of the broadening? We're bouncing on the broadening formation? All right, bet. There's another confluence. Oh, now we have an actionable signal off the bottom of broadening formation? Oh, wait, it's an actionable signal on the 2-week chart? Oh, wait, so the play is going to last at least 2 weeks potentially? And remember, it's a potential. I want to bring the example, because a good example is Cat. Cat recently just had 2-week inside bar breakout. And y'all know I was going crazy about, oh, Cat, we go crazy. I want everyone to realize that when you see an actionable signal, that should determine the potential, right? The possibility to do something. It's not definite. So when you see a double inside bar, it's not automatic that it's going to go crazy. You have the chance to go crazy. And if you trigger it, I would rather take a double inside breakout than a regular inside breakout, if that makes sense. Because we know that the double inside breakout has a chance to go crazier. We know that a 3-2 continuation it's bigger than a 3-2 continuation off of a hammered 3. It has a potential to do more of a bigger move than just a regular 2-2 up candle, right? Like, so because we see that, because the potential is, and that's why when you see Costco with the 3 shooter on the 2 week, you're like, hello, outside 3 shooter with the outside 3 off of a shooter? Like, oh, you got the potential to go 3-2 continuation? That's all you need. And that is why Costco was on the watch list for everybody's Stratus for the put side this week. That's why Walmart was on the watch list for Stratus on the put side this week. Because you're going to give us a 3 down on the 2 week? You're telling us that you have the potential to go back down to the broadening formation. That's all I want to know. If you reverse back to the upside, then fine, you reverse back. If you trigger a 3-2-2 red back to the upside, then I cut the play, right? You cut it. But if you're telling us right now, hold on, at this moment, if you look at Costco and I remove these drawings and you do a short position and you got in here, this is your stop. If next week it wants to trigger 3-2-2 red to the upside, that's your stop right there. But look at your potential for the downside. Hello. All I want is potential. Because you know your exit. Our exit and our invalidation level is right there. This is our invalidation level. Invalidation cut. If Costco get back to above 536, all right, oh well, it's too late. But if Costco go 2 down next week, hello, see you later. I will see you at 420 type shit. Like, this is what we talk about. And the strat helps us. The strat tells us when to exit the play. We got the actionable signal on the 2 week to let us know. So you have your exit already and you have your entry already. This is your entry right here. Entry, entry, and you have price targets to the downside. Boom, there's your first price target on the week 2 week chart, PT. And then like you can go on the weekly. Let's see, does Costco got any gaps to fill on the downside? Let's see. Oh hell, nah, that's not really a gap. You ain't really see it. Oh, gap right here. Nah, yeah we do. Yep, gap right here. It's small, but we can do it. $592. Market want to tank, XLP want to tank, take it back to $490. And while you in the $500 puts for October, that's swinging. Like, and when it comes to swinging as well, when it comes to how I like to swing, I want to be in the money with at least 2 weeks left. Why? Because you just get to eat off that. I keep forgetting if it's intrinsic or extrinsic value. But anyway, you get to eat off that that delta and that premium. As soon as you're in the money, you're now on a 1-to-1 ratio when it comes to delta. So if price goes up in terms of the underlying, and you're in the money, your premium goes up $1. Right? That's just how it works. That's why, so like if you're in the money with time left, like shout out Zeus, this is in the 170 puts and 170 puts for Nvidia. Nvidia at 154 right now. You need a September contracts. If Nvidia want to go to 130, hello, give him a 2,000% play. That's how you swing in this market. Swing in this market with like you don't gotta worry. He's up 400% on Nvidia on September 170 puts. Does Nvidia look like it want to reverse to you right now? Nope. And that's the advantage of swinging. That's why I'm like, bro, buy time and get in the money as soon as possible and then eat off that shit. Let it keep going up, but let it keep going down. As soon as you hit that reversal, boom. I will hold you on for a month because it's still going down. Why get out? Why? If you want to give you 1,000%, why get out? You know, you got your targets. It hits your first gap fill, next gap fill. Oh, you got like AMD. AMD has a... What AMD went, the reason why I'm holding on to AMD puts, even though AMD started to go crazy towards the last whatever the 4 hour of the day, is like, hey, you got another gap fill at 82.19. You still full-time freight continuity to the downside, and I still got to flip the quarter red. Why? Oh hell yeah, I still got a gap at 82. And you see, this is what when I'm talking about confidence. I'm not just saying, I'm confident, but like what I want y'all to have is like, look at the time frame, y'all. Like you got red day, red week, red month, green quarter, and red year. Like who's there? Majority. Is it buyers or sellers? Like who's here? Buyers or sellers? To me, it looked like they're selling this shit. So that's why I'm like, oh, okay, the majority of y'all is selling. I'm going to sell with y'all, okay? I don't care if you want to go freaking like have a green day. I don't care. If I have time, TTO that back down to the downside. Y'all saw what SPY did on Friday. That is what a TTO back down looks like. That's what a real TTO back down looks like. That's a real TTO back down. 2 weeks, take out 4 weeks with 1 day? Psst, let me show you how the market really works. That's why I don't get scared when we get a 2-up day. Like, I don't get scared. The way the market works is that it's going to obliterate those 3-up days in one candle. In one candle. You just can't be scared. You got to buy enough time. You got to have the mindset like, oh, okay, if you know that you freaking out on, and this is why I say like, oh, once you can see a play go to 0 and be like, okay, it went to 0, like whatever, then you know you emotionless. You got to be emotionless when it comes to swinging. Oh, this is the part I want to bring up with Sal. You have to be emotionless when it comes to swinging. Because when it comes to swinging, we often, as straters, we're straters. So we get in early. We don't wait for the 9 to 21 EMA to cross back to the upside before we get in. Now, we get in on that 212 rev, and then while the 9 is 21 is still fiddling with each other, right? Like, we get in early. So oftentimes, shout out to SO with the triple inside break on the weekly. We got in on the first week right here. Got it on the first week because it went up. Actually, I think I got it on the 4-day chart to be like specific. Yeah, it was that 2. Oh no, it was on a 2-day chart. I try to get a little sneaky with it. Yeah, I try to go in on the double inside 3112, and I was like, oh no, I'm gonna go early. Then SO was like, oh yeah, we're gonna range bound for like 6 more days. But because of the fact that it was still inside week, and I kept telling people, I was like, yo, SO is still inside week. They didn't say it's reverse. Did it reverse? No, it's an inside week consolidation. That don't mean reversal. Consolidation don't mean reversal. All right, boom, a second inside week. Fuck, we're down 40% on the play. We should get out. Why? It didn't reverse. Like, you still have 4 weeks left to your contract. It did not reverse yet. Until it reverses, you get out. Third week, fuck, now we're down even more because it's still consolidated. It still didn't reverse. It still didn't reverse. If anything, this should make you more excited for the breakout because you're now off of a triple inside week. And then boom, if you were able to hold SO for that 4th week, SO said, hello, sorry for waiting. Now we're going to pay you. And that's how you do it. And then boom, at least 3 weeks of a breakout. 3 weeks of consolidation, 3 weeks of a breakout. And they said, oh, let me give you the 4th one. Thanks. Just for waiting, let me give you a 4th week. Sorry about that. But hopefully this just makes sense. Like, you know, like the candle, like the actionable signal will tell you. And like, we don't get out unless the chart, I'm getting out until the chart tell me to get out. I'm not getting out of the AMD puts until we didn't even get it. AMD's not even green on the day. Like, that's why I'm like, we still a red day. Like, you know. So hopefully this just makes sense when it comes to swinging. You want to get in on those. Oh, another example. I'm sorry, I like to talk too much, but I really just love talking about this shit. Like, I just really do. XLE on the month, y'all know energy going stupid. The reason why I like energy, like, it triggered the actionable signals on the monthly. 322 rev for almost every single energy ticker. Like, hold up. Just go to XLE on the month for every single energy ticker. 322 rev, fail to up rise of right now for CVX. What is this? A 22 rev for ZOM, I guess. Double inside month for Oxy, break to the upside. 312 for WMB, 322 rev for EOG, 322 rev for VLO, 322 rev for SLB, 322 oh no. That's a 22 rev for PXD, 322 rev for PSX. You see where I'm going with this? Like, they almost got all the same time frame. Why? Because the sector matching up. So this is why that's why every single time you see me get into play, what is the sector doing? I want y'all to do that as well, because that's how you prevent yourself from getting into meta calls for today when XLC didn't even break below that XLC didn't get above R1 pivot. XLC, a meta was on a beam to the upside for the first 2 minutes of the day, but I immediately look at XLC because I'm like, bro, I'm not trying to be on no fake out shit, especially when I know that the trend is down. And then when you see that XLC cannot get above its target or its level or its particular level, whatever you have, then, let me just show y'all. Let me show you, like, in real time what actually happened. And why I said, like, I'm not getting in. This one right here, R1 pivot. So right when Meta went up, Let me show y'all. Okay. So remember, Meta went up out the gate, right? And I was like, oh shit, Meta might be the one. We might trigger the day. We about to go stupid. All we got to do is get over R1 pivot. But then XLC was not getting over its R1 pivot. So for me, and this is why I say, like, yo, things just line up, bro. Like, things are just going to line up. If XLC can get above its R1 pivot, you see how now I'm going to be more comfortable to get in Meta because now we are now above this resistance. But if we got slapped by that R1 pivot, then I'm not going to take Meta because I need XLC to break out with Meta too because it's going to follow the sector. And so that's why I'm keep preaching like, yo, if you're going to get into play, look at the sector too. Make sure that the sector is moving with it because you don't want to get slapped by Tesla if XLY is going down and you trying to get in calls. If that makes sense. Or Microsoft going up, but QQQ going down and you trying to get in calls. Makes no sense. The market works together. I know I've been going on for hell long. Holy shit, my bad. It's been like an hour and a half. Any questions? Please. I know we good? Yeah. Yes, sir. So you see this? I'm gonna show you right now. So I have the sectors up on one chart, and then let me go to the 2 week, for example. Where is it? Oh yeah. Yep. Let me do that. 1 sec. Yep, I got you. How's that? Yes, sir. Okay. So I'll like have all the sectors up on one chart and see like, all right, what actionable signals are they showing us on the time frames? So, XLU. Okay, XLU. That's the first thing I noticed. All right, so XLU. First thing I see about XLU, like, oh, you hit in the top of a broadening formation. Oh shit, you might be doing a double top of a broadening formation right here. So I'll literally so I'm like, all right, this could be a possible double top. Only thing is that we have full time frame continuity to the upside besides the week pointing down. But because of the fact that we have, so this is going back to my example. This is what's the risk to reward if we were to short XLU, right? We go here for the short. Our stop loss is right here at the top of the BF, and our target is potentially all the way down to the bottom of the BF, right here. Okay, so this is the XLU is a prime example of like, oh shit, this is a potential swing short. The only thing that's sus about it is the fact that on the macro time frames we still are pointing up. So this will be, I think it was Shmurda who asked that question earlier, like how can you anticipate like taking a play like back into when it's full time frame continuity to the upside? So for XLU, I'm looking to see, all right, how can we flip that month? Because we know the week is already red. How can we start to flip that month red? How can we start to flip the quarter red? How can we start to flip the year red? Now what you do is look at what? Look at the month. Oh shit, now we get more enticing. So look, the month will flip back red underneath. Oh shit, what the fuck? That is Ray. Wrong one. The month will flip back red, the flip, under $73.72. Okay? So now let's go back to that week. Now, is that a gap? Yep. There we go. Here are our targets. And so now this is where you get to see like, all right, I'm finding it right now. Hold on. I'm going to show y'all. There it is. Found it. Target. target right there. Boom. All right, XLU got the gap fill play tomorrow. All right, so we got that. Then what other target do we have? You got another gap right here. Gap right there. All right, bet. So now, look at this. This is a gap for XLU. GPT. This is a gap fill. This is me anticipating the flip back down into red, right? If XLU wants to flip back red, how can we get there? Okay. How, like, where is the train gonna stop before we get there? All right. First price target. If XLU breaks 2 down tomorrow, gap fill play completion. Let's fill the gap. Boom. Fill the gap. Let's say XLU want to fuck around and give us more than the gap fill play. Boom. Let's say we want to close at around $74, right? Now look how close are you to flipping the month back red. So if you were to just draw like a highlighter, I guess. Okay. I guess, right? So like just imagine that this is, actually that's horrible. Sorry. Okay, the second day we go like this. Boom. Okay? Fuck. Why'd I do that? So tomorrow it's like this. Boom. Okay. So that's tomorrow. Tomorrow's candle, we break 2 down on the day, we fill the gap, and it wants to give us a little bit more. Now, look how close you are to flipping the month back red. I'm literally going to say, like, all right, y'all, like, we got price, we got XLU at 74.06. We're about 30 cents away from flipping that month red. If we go 2 down on the day, then we literally flip back down into full time frame continuity. And then you see how it literally works its way back down from being full time frame up to full time frame back down. Hopefully that makes sense. And then you go to the quarter. When do we flip the quarter? Okay, the quarter don't flip until a minute. So this don't flip until a minute. That's $70.49. But the advantage of the quarter, oh wait, the month is about to end in a couple of days. Oh shit. We're about to trigger a 122 rev strat on the month. All right, boom. That just added into your analysis. So now, not only do you got the gap fill, not only do you got the flip to flip the month red, but then you also got a potential 122 rev strat on the month. And that is how you come up with like all these confluences that can aid into this can possibly happen. And remember, the only way you gonna get out, you have your stop loss. You get out if it goes back, if it ever reverses back to the top of the BF. But if it don't reverse back to the top of the BF, you still in the clear. Hopefully that makes sense. Yes, sir. Correct. Yes. Beautiful question, and I'm gonna show you why. And it's the reason why I do it is simply because that is where the gap is actually at. Let me show you. So XOM. Oh my god, I got all these freaking. See, I gotta take all these. Actually, here, just do it on this. Okay, perfect. Now. Great question, because I know a lot of people are going to get that answer to this question right now. So the reason why you want to, it's very important where the gap actually presents itself, is because every candlestick tells a story. Every candlestick tells a story, and this is why we use candlesticks. So ZOM on the 22nd, ZOM opened at 93.42. Price went down and went to a low of 91.86 intraday. Then price went up to a high of 94.49. Then it closed at 94.01. We closed at 94.01 on the 22nd, and the following day we gapped up in price. We didn't gap up. I want you to remember, we don't gap up from 94.49. We gapped up from the close, right? And I want you, and I'm going to show you on a smaller time frame. You're not going to see this on the daily, but you're going to see this on the smaller time frame. Because remember, this wick, that wick happened intraday. It didn't happen at the close. This happened intraday. So we went up, then we went down, closed, then gapped up. And I'm going to show you right here. This is the intraday movement. Price went up, then it went down. Oh, sorry. This is the day. The 22nd. This is the 22nd. Price went down. Remember that wick, and I'll show you right here. Oh, let me do it right here. Zoom on the. Okay, perfect. Okay, here. So, price went on this day of the 22nd, price went down, then it went up, then it closed, then it gapped up. Now let's look at it on the 5 minute so you can see it. Price went down, price went up, then it closed, and then it gapped up. Does that now make sense? That you see it on the 9501 and you don't see it at because okay, so if you had the wick at 94.49, you see how the gap is really to here? Let me take this off. Yep. So that's why you want to look at, I want everyone to look at where did we close, because we technically gap up from the close, then price tries to, with the next day, price tries to come down with this wick, but then we ultimately go back up. So the gap is really from this wick to this close. Does that make sense? Of course. Great question. Great. Oh, and I'm sorry, I like to talk. And so that's why I want everybody, when we look at SPY right now, like this SPY right here, this is a gap, y'all. Hold on. Like this is a gap. Oh. These are gaps. So this one right here, because why every candlestick means something. So on the 18th, price opened here, we went up, then we went down, then we closed at 381.95 and we gapped up from 381.95. And so if you were to go to the 5 minute time frame, this is where you see that gap, those gaps. And there's that gap. So yeah, and there's your gap right there for the second one. So yeah, price closed here, then we gapped up from here. And you would only see that if you have the regular trading hours. If you had the extended hours, then I know you're going to be able to see like all those freaking, you know. See, this is the extended hours. Yes, sir. No, you're good. I'm done. Yeah. Yes, excellent. Yes. Can I show you? Oh, great question. Let me show you an example for Apple. This is what. Let me give you an example. This is why the 50% rule is so powerful, y'all. 50% rule for Apple. It's on the week. Oh no, sectors. 50% rule on the previous week is very, very, very powerful. Let me show you. Look at this. Look at Apple. Look what Apple did on its uptrend, on its 8-week uptrend, y'all. Like when I look back at price, and this is why I stay up at night to just look at charts, because I'm just like, wow, That's so beautiful. Like, because it gives me confidence that, all right, next time I'm gonna mark that 50%. Next time, if I'm in Apple calls and it goes to the 50%, I'm not gonna get out, because if I don't get out, I could have been in the play for 8 weeks. Now look at this. Apple, it goes 2 up on the week, right? If you just every entry, right? If you just have your level set for every entry, you marked your 50% as soon as you got in Apple on the week and you marked it. Look at where Apple bounced the second week. It came down and you're like, fuck, I'm in calls, but fuck, like, what do I do? What do I do? It bounces right off the 50% of the previous week and said, buyers are here. See you later. Comes back up. Boom, 2 up on the next week. All right, we in the clear. Let's go. Let's go for another round. Apple comes back down. You marked your 50% of the previous week. Boom, bounce. Buyers defended it. Said, nope, you are not breaking the 50%. That's why I'm like, bro, the 50% rule is so freaking powerful. Like, it is powerful. And then you see the next week, buyers defended that. Boom, next week. Right? Market 50% of the previous week. Oh, we wick down, but look, did we ever close below the 50%? No, we don't. That's why the close is also important. Boom. Now you're in Apple for another week. You're still eating 300% off Apple calls. Next week, Apple just continues riding. But notice how the 50% rule was defended for 4 weeks up for Apple. And with that being said, I want you to look at XLE and mark those, like, literally when you go 2 up on a week, when you're taking a play that goes 2 up on a week, mark that 50% in the previous week immediately. Like, just do it immediately so you can see where we could possibly bounce from, right? And if we break that level, you know you're cut. You know your cut level. Like, and that's why I love this strat, because when you enter, you literally can define your risk at that moment. Like, you can literally mark your invalidation zone at that moment that you go into the play, right? And so if you know 0.5 fib, right now we are holding that 50% mark on the week. So we have 3 more days to the week. So we're going to see if we can hold Thursday, if we can hold Friday, right? Then you know, all right, buyers are still defending that level. And this is where you're using the chart to actually give you that objective rather than you just guessing. All right, I think I'm gonna get out here. Like, nah, I'm just gonna let the chart tell me when to get out. I'd rather use the chart than me guess. I look like guessing. Hopefully that helps, bro. I'm not. Yeah, of course. I've rambled for a long time. I know I've like just talked your ears off. I hope this helped. I am coming up with a part 3 to the beginner's guide to the strat, with specifically that has to do with swinging, so I can get like a curated PowerPoint for you all, because obviously you guys can just tell I just go off of tangents. But I hope this helped. I will have this recorded for you all, and then I'll also put it in the lessons. And yeah, man, shout out to the fucking strat. Like, I appreciate you guys saying, like, my passion for teaching. Man, it's because of the strat, y'all. Like, I would not feel this way if it wasn't for the strat. I didn't feel this way about Elliott wave theory. I didn't feel this way about any other. It's because of the strat that I'm like, you know what? I have to teach this to as many people as possible. This shit changed my life. Like, yes, sir. Yes, sir. Yes, sir. Should I put it on YouTube? Fuck it. All right, put it on YouTube. Shmurda said ecstasy. Hell nah, bro. We just high off life, bro. What'd you say? Oh, thank you. Thanks, man. Trying to be like you, brother. I appreciate it. Man, I'm trying, man. Man, I'm trying, man. I appreciate all you guys. Appreciate all you guys. I just want us to win, man. I just want us to all win. That's the whole point. Exactly. Hey, we all gonna get. I'm telling you, bro. Detective, he had one-on-one with me, and he was like, "Oh." He's like, that's what you gotta do. I was like, yeah. I was like, so do you get it? And he was like, yeah, I think I understand. All right. And I was like, next thing you know, 2 weeks later, smacking. I'm like, bro, what happened? He was like, well, you just told me do this, do this, do this. I'm like, just like that? And then that's what you're doing? He's like, yeah, I just listened to you guys. I'm like, okay. Like, Mm-hmm. 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 And that's the whole. And man, I appreciate you for asking those questions, bro, because I know you've been killing it. And like, it's like you, Sal. Like, I really do appreciate it because I know you come from many discords, and like now you're here. You're like, oh shit, like this is the real deal. We're not here to like, we're not here. We're not no Ponzi scheme. We're here to be like, yo, we found something that I don't go to sleep because of this shit. Like, I hope people realize, like, I'm not like not sleeping and watching movies or shit. No, I'm reading charts. Like, I'm looking at charts and I'm literally like, oh my god, wow, no way, no way. Like, this is the thing that keeps me up at night. Like, and it makes us money. It has the possibility to change the direction of our lives. Are you kidding me? I'm not gonna take advantage of the situation. I'm not gonna let everybody eat off the situation. Like, I'm just lucky. I'm a nerd about it, and I like enjoy it. That's the reason why I do it, because I'm a nerd. I'm just a nerd. I'm like, okay, this is cool. Like, but hey, bro, all of us, bro. Mm-hmm. Yeah. Mm-hmm. Mm-hmm. Yeah. I mean, it didn't. Unfortunately, the call slide didn't hit last week. But if you play, yeah. But if you play puts on her this week, she paid. Hey, she pays, man. She pays. But thank you all for. I apologize for the late night session. You know how we are on the West Coast. But I appreciate you all being here. This will be recorded. Let's just make some fucking money, man. Let's just make some money for our families, make some money for ourselves. Let's do everything that we fucking want to do in our lives. Let's like set all our goals. Let's achieve all our goals. That's what we're here. That's really why we're fucking here. So I appreciate y'all. And yeah, I will see you all tomorrow morning. Y'all know I'm gonna be up tonight charting, so but I gotta get some food first. So appreciate you guys being here, and you guys have a wonderful rest of your night. Peace out, everybody.